SABC News, hello.
If you want to know what's going on around the world, there's only one place to be.
Investors are going to be looking out for various key metrics which credit rating agencies find interesting as well. Well, good afternoon. Time to have a look at the markets. Asian markets mostly higher on speculation that Chinese authorities may be deploying more stimulus to shore up the economy. Meanwhile, Japanese markets rose after the country reported better than expected export data. When we look at what was happening with the likes of Tencent, they rather reported their quarterly earnings, reporting their first revenue decline in its history, the latest victim of an ailing Chinese economy. However, that share was flat ahead of those earnings, and it's kind of similar to what we saw with the likes of Alibaba, as well as the country in China obviously deals with these the sporadic lockdown restrictions, as well as what's happening in the property sector. Nonetheless, when we look at European markets pulling back after that rally that we saw on Wall Street, lost some momentum, and that rally was driven by the likes of Walmart and Home Depot. Locally, the rand at around 16.58, ahead of those Fed minutes that we are expecting to give us some kind of idea in terms of where the interest rate trajectory where it's going rather for the Fed. We're expecting that at 8 p.m. Local time. However, to give us some more perspective on the markets, we are joined by Carmen Belwana from ABSA Asset Management. Carmen, thank you so much for your time. I mean, given the picture that I've just described, and when I look at my screen, resources down around 3.8%. What's driving our markets right now?
Yeah, it's been a tough morning. Unfortunately, Sibania came out with a decline in earnings warning. So that's been a significant tailwind for their decline, and then obviously filtering through to some of the other platinums. Sasol down significantly on the back of a weaker oil price, whereas we've seen the retail sector pull quite well on the back of Truworth's really good trading update, and we've seen the rest of the retailers also pull forward on the back of that. But largely, I think lots of concern going into the FOMC minutes later, which probably is having an impact on the JSE as well.
That's quite interesting, because I was going to ask you market sentiment, because over the past few weeks, or at least even in the past couple of months, there was this sort of fear moving through the markets about a possible global slowdown and recession fears. Are those fears still lingering?
I definitely think so. If nothing else, the indicator is the volatility that we see in markets across the globe. As much as there may be a reduction in the probability of a recession, I think it would be remiss of us to believe that even though inflation has come off marginally in the US, down to 8.5% versus 8.7% in the previous month, we did see the job numbers remain very strong and actually exceed consensus. So it's a bit of a mixed bag, no clear direction at the moment, but I think the probability of a recession still remains.
Given the earnings that we've seen so far locally, what did you make of them, and what does that imply going forward, at least for the sectors that you focus on, and especially when they report their numbers?
Yeah, I think you have to categorize, as you've said, the different sectors On the retail side, what we did see was a significant drive in terms of earnings as well as volume growth. We are yet to see some results come out later in the month, but a lot of the trading statements indicating that things have been better than we had expected. The consumer may not be under as much pressure as we have expected. And I think more importantly is the outlook in terms of post the year ends or the period ends, was that a lot of the retailers were saying that growth continues, albeit off the back of a low base, because we do know last year we had the unrest in July. But I think that's definitely boding well going forward. And similarly on the resource sector, we're also seeing some good numbers, specifically for those that have an interest in coal. BHP we saw had very, very good results and a record dividend. Maybe not the same or similar for telcos, a bit of a mixed bag there. MTN did really well, whereas Telkom didn't. But I think all in all, it's been a lot more positive than we had expected. Some concern around whether we should expect earnings downgrades going forward, but a lot of the rhetoric and the guidance saying at the moment they don't seem to be seeing the pressure.
We have the FOMC minutes later this evening. What's the market expecting?
I think more importantly is the rhetoric around how hawkish they'll be in terms of the meeting and what came out of it. Looking for indicators around whether they are still remain very bearish. So will we see a 50 pips hike or 75 pips hike? I've also heard some commentary around, depending on how hawkish it is, may even be pushed to a 1%. We haven't seen that out of the US as yet. So probability at the moment stands 50-50 between 50 bips and 75 bips. But I think more importantly is to determine whether the view is that the Fed believe we've seen a peak in the US inflation. Latest commentary from the various regional Fed presidents indicates not so much. So it'll remain to be seen whether it's the 50 or the 75.
Before I let you go, what's your sense of the emerging markets?
I am biased, unfortunately, but having said that, there's lots of opportunity. Even if we look at the bonds market, we know at present the 10-year bond trading quite well. And when you compare that to the equity market, where we definitely see that there's a lot more risk, and the long-term equity market returns not as high as what you could get on the longer dated bonds. Definitely a positive, especially compared to the developing markets. But I always caution that whatever happens in the developing world, they sneeze and we catch a cold. So keeping in mind that a lot of our trade happens with the developing markets, so we are not immune from what happens there. I think at the moment, even if you look at the JSE compared to the S&P, definitely faring a lot better. But, there are geopolitical risks and shocks that we can't factor in. So remaining cautious as we move forward for the year.
Carmen, thank you so much for your time. That is Carmen Belwana from Absa Asset Management, giving us her perspective on the markets. And of course, we will unpack those FOMC minutes for you in detail. That is it from me. We're going to take a quick break, and when we come back, we'll have more news for you. So stay tuned.